Okay, so in the last video, we showed you how to place a buy stop limit order with a first trigger sequential or first triggers all stop loss so that you have the stop loss triggered by the purchase order. What we're going to do now is we're going to cancel that order and put in a bracket order so that we can include the target we want to sell at. We want to be able to include the target price out here and say, I'm going to sell this when it gets out to 95 or to 97 out here, and I'm going to put that into a bracket order. Now, the bracket order will give you the first order that buys, and then it'll allow us to set up two selling orders, a sell limit out here at the target, so it'll give us a sell limit out there at the target, and I'm going to probably shoot for 97, and we'll have that first order, if it triggers, put in that target order as well as the stop loss. And those two orders are going to be linked together. So whichever order gets hit first, so if prices rise and hit the target, it'll then cancel the stop loss. Or if prices fall and hit the stop loss, it'll cancel the limit order. So we're going to go ahead and I'm going to cancel and replace that. We're just going to basically duplicate the same order type, but we're going to do a bracket order. Okay, I'm going to go click on the trade tab. Going to click on the buy custom with a stop, or excuse me, an OCO bracket. So we'll do buy custom with an OCO bracket. You can also get that ticket, by the way, right off the chart. You can right click and go buy custom with an OCO bracket, and that'll open up the ticket. We'll use the stop limit to get in. The last time we used the confirmation price of buy at 90, what was it, 90.33 or higher, but don't spend more than 90.66. So that was our 25-50% of the ATR up above the trigger price, so 90.66. Now we're going to use the target order. I'll set that out at 97, and then we'll use the stop market order, which we had set down at 88.21 or so, 88.23, somewhere in that ballpark. And we'll go ahead and make all those good till canceled. And just to make sure you're clear here, this first order, we'll stick with the 100 shares because, again, I already predetermined the risk tolerance. We'll buy if it goes above 90.33, but we won't spend more than 90.66. So that requires the confirmation. Then, after that order gets filled, these other two orders will be put in. The first order triggers the OCO, which means one cancels other. And so we'll have two orders, one to sell it at $97 target and one to dump it if it dips below 88.23 there. I'm going to go ahead and hit confirm and send, and you got to remember to stop and read these order tickets and understand that, hey, we're going to buy 100 shares in the first order, and then it says orders 2 and 3, and those are triggered by order number 1. Those orders don't exist until they get triggered by order number 1. So I'm going to go ahead and send that in. And now we see the bracket order on our chart. You can actually see the link right here. That little link right there says, hey, these two orders are linked. So again, if it goes up, it'll get triggered into the trade, and then the sell limit and the sell stop will go live, and whichever one of those orders gets hit first, so if it goes up and hits that target, ka-ching, ka-ching, winner, winner, chicken dinner, it'll cancel the stop loss. If it triggers and then reverses, it will cancel the limit order and stop out, and it'll prevent us from becoming sad as traders because it'll limit our loss so that we are ambivalent about the outcome of the trade. So we're either going to be happy or ambivalent about the trade because we predetermined our risk tolerance with the bracket order.